A novated lease is a tax-effective structure used by employees of companies to finance motor vehicles. It consists of a three-way agreement between the employee, the employer, and the finance company. In a novated lease, the employee owns the vehicle, but the employer agrees to make the lease repayments to the finance company while the employee is working for them. The employee will sacrifice some salary to compensate the employer. However, this will be before tax, which means a significant saving for the employee. Depending on the conditions, there is likely to be a fringe benefit tax liability. However, most drivers will be well in front by the time this is accounted for. So what are the benefits of a novated lease? Well, for employees, they have a greater choice of vehicle compared with a traditional company car option. Financing of the vehicle is paid by pre-tax dollars. There's an option to own the vehicle at the end of the lease term. The vehicle can be leased for 100% private use, and with employer consent, multiple vehicles can be leased this way. For employers, it's an easy and cost-effective way to add value to an employee's remuneration package. The time and costs associated with management, acquisition and disposal of the vehicle are not the employer's responsibility, and on termination of employment, the responsibility for the vehicle is passed back on to the employee. Okay, so how exactly can you save with a novated lease? Well, firstly, there's the savings you get on the purchase price. Through a novated lease, you actually get a fleet discount off the purchase price, which means savings of up to $5,000 to $6,000. Then there's the GST. You don't pay GST on the purchase price, so that's another 10% to take off the top. In fact, GST isn't payable on the fuel, tyres, servicing, or any other vehicle ownership costs. When it comes to servicing, you'll get a 20 to 30% fleet discount off the servicing costs. You'll even get an upfront discount off the petrol price at the pump through another fleet discount arrangement. And most importantly, all vehicle ownership costs are pre-tax dollars, saving you thousands in tax payments. Let's have a closer look at the petrol savings. After all, fuel is one of the most expensive aspects of vehicle ownership. Let's compare the two situations. You pay $1.20 a litre to fill a 60-litre tank. That costs you $72, but that's after tax. To pay for that petrol, you may have to earn $105. Now, with a novated lease, whilst the pump price is, again, $1.20, you don't pay GST. Then there's the fleet discount on the fuel. So to fill up your 60-litre tank, you're paying $64.20. But that's pre-tax, and there's no direct FBT liability on fuel costs, which basically means a saving of $40.80 every time you fill up your tank. Over a year, the fuel savings alone are huge. When buying a car, it's easy to lose sight of the big picture. Sure, there's the lease repayments every month, then it's time for a service. Then your tyres need replacing. Then it's rego and CTP renewal time, and the cycle goes on and on. Over 3 years, these costs can really start to add up. A novated lease is different. You make only one low monthly repayment that covers all your vehicle-related costs. With the fleet and tax savings, you're starting from a much lower base and have the comfort of regular repayments coming out of your pre-tax salary. Let's say John earns $87,000. Is buying a $45,000 car and drives approximately 25,000 kilometres per year for both business and private use. By the time the tax and fleet savings are taken into account, the difference to John with a novated lease compared to conventional finance would be around $120 every week after tax. That's $6,240 extra in his back pocket every year. So let's have a look at the previous graph. John is saving nearly $20,000 after tax over a 3-year term. So to find out how much you could save with a novated lease, simply visit our website at fincar.com.au or give us a call on 1300 346 227.